Jim CRAMER versus RJTICHARTS versus markets versus crude oil. Do you know what the difference is between Jim CRAMER and RJTICHARTS, as well as many others are? But for now, we're only talking about Jim CRAMER. The difference is that he works to explain things after the fact, and we simply focus what is to be. In November 2007, we signaled to sell the Dow, and from that time forward until things finally unfolded, Jim CRAMER was bullish, and we had the pleasure of watching a man go ballistic because he had gotten caught, sucker punch from the market as the markets tumbled and tumbled. We simply were able to say, "We told you, Jim." As you can see, our Dow Jones signals in 2007 was between October to December. In the S&P 500, our sell signals were between October to December. In the NASDAQ, you can see that our sell signals were December, January. Then we also know his call on NVIDIA wasn't a long ranger forecast, especially since we also put out buy signals near the lows. As you look at the NVIDIA chart, you'll see back in 2014, we got buy signals, and again in 2020, we got buy signals. There have been many other times we've shown our algorithm's wisdom against Jim and the markets in general, like the unexpected slap in the face decline fourth quarter 2018 that Jim worked to explain after the fact, unlike us who warned. He didn't call the 2020 decline 3 to 9 months before it unfolded, yet he explained it after the fact, and the 2022 decline when he was telling investors to buy, while simultaneously we had warned in our sell signal that a decline was at hand for the stock market. And yet again, he explained after the fact, and lastly, he didn't see the early 2025 decline, but he explained after the fact. We have the receipts, and they are splattered on YouTube and our email alerts and our charts. We are the only firm to forecast the 2020 decline 3 to 9 months before it unfolded. As you can see, on June the 20th, 2019 at 12:33 a.m. Central Daylight Time, we sent out RJTI charts versus, let's just make it clear for the DJIA and other indices. Look at this chart, DJ30. Let us shorten our reasons for this message, but keep in mind there are many other markers and times our stomach felt a little queasy from listening to Jim CRAMER explain after the fact. Yet let us get to the core of this message. He's doing it again. What do you want? An explanation after the fact, or seer, a forecast that can offer that which could come before it becomes reality. It is obvious that all of those who are explaining what is going on, as opposed to saying we told you it was coming, were simply caught off guard and are trying to navigate or offer the appearance they have a handle on what they didn't see coming. On CNBC, Jim explained that the war, crude oil, is the reason why the markets are moving down, and that the NASDAQ will continue to fall until it's over with. We get a queasiness in the stomach as we watch the entertainers on CNBC. What makes us different? We told you in the YouTube video. Simply go to YouTube to see our accuracy by plugging in the above title, go to time marked 2/4/3/33, https://www.com/watch $V $SKHMLUSSY. Or you can review our projection provided in the video below. But crude oil hasn't moved that much, and as of this message, trade level is under $65 per barrel. Is there something lying underneath that is to spark crude oil to $90, negative $150? We believe, based from our algorithms, higher crude oil trade levels are coming. And we are also going to upgrade our price target for the energy index from 3,500 upper range to 3,500 to 3,940. This may be one of those times. In addition to our already expectations that there's going to be a 40% stock market decline, yet the variable of higher crude oil simply throws more fuel on the fire when things erupt, correct, or revisit lower levels we have mentioned before. Sparking crude oil could also just be the reason the decline initiates for equities to decrease in value. Is a Middle East conflict to come? We can't speak with certainty, but it sure does imply that some major producing oil country has found trouble. Crude oil has hit a high of $119 per barrel as of now, which is well within our projected range. This is what makes us different from Jim Cramer. We tell before, not explain after the fact. For the most important thing in investing is being able to see what's coming so one doesn't get surprised. Thanks for the explanation, Jim Cramer, and others too. It is easy to see the trees that make up the forest, and it's even easier to see the forest that's made up of trees, but it is not so easy to see behind the forest. Get your Ramo today. RJTICharts.com. Driven by infinite wisdom and its proprietary trading systems.